Hey guys, Joel Frank here, market analyst for YouTrading, and in today's video I'm going to be going through a quick trade idea that I'm currently thinking about monitoring, seeing whether it could potentially come into play. So let's jump straight into it, guys. It is related to WTI, or at least this chart that I've got up here. This is a CFD that pretty much tracks the price of the front month future contract for US West Texas Intermediary, which is like the main benchmark for sweet light crude oil in the US. And just to talk about what's been going on in the last couple of days, we've seen a pretty good rally in oil. We've gone all the way from 80 on pretty much Tuesday, all the way to test this downtrend, which I've got marked up here, which has been in play for quite some time, and the 50-day moving average, which is there in red. We haven't broken above these levels convincingly just yet, but at around $88 per barrel, WTI it's been a strong week. Now, what's been going on? Well, we just had OPEC come out and say that they're going to reduce this was yesterday on Wednesday, they're going to reduce their oil output targets by 2 million barrels per day. Now that, the chatter last weekend was about 1 million barrels per day being axed from the output target. So they've gone bigger than expected here, and that has certainly been supporting the price. Although one key thing to mention is OPEC, prior to this big cut to their output target, they are already missing their output targets by a significant margin because of a number of the smaller countries, particularly in Africa, have been struggling for like more than a year to keep up with the steady pace of output hikes that OPEC had been doing. And obviously since Russia's invasion of Ukraine and the imposition of sanctions from Western nations, Russian output has also fallen as well. So in terms of what is this output target cut what's the effect that it's gonna have on real oil output? Well, I think the Saudi oil minister said it might only be around 1 million barrels per day in reduced real output. So not quite as big a deal as the headlines might suggest, but it does seem to me still that oil is threatening some further near-term upside. If it can get above this area of resistance here, which I just spoke about, this downtrend from this June high and then the August high and the 50-day moving average, then it can in the near term test 90. Now, in the last couple of weeks I had been talking about how I just didn't expect oil to be able to get above 90. I'm still doubtful that it will, but in wake of OPEC's more convincing action, let's say, I think there is a chance that we could get above this resistance area from early September, which is just above 90. We could have a bit of short covering, perhaps a bit of a stop run, and maybe we could head into the mid 90s. An area I'm looking at, and this is kind of where the trade idea is this upper 90s area where you've got resistance in the form of the late August high, you've got the 200-day moving average. Oh, laptop's about to die. I can't see us really moving above this area. Why am I saying that? Well, the global economic outlook continues to deteriorate. We've got PMI data that was released this week out of the US and other parts of the world, which continues to show a weakening in the global economy. The demand outlook is not looking good. We've got central banks which continue to aggressively tighten interest rates, raise interest rates, which means that it's likely that we're going to have some kind of recession. If places like the European Union and the UK, they might already be in recession, and the US, with all this monetary tightening, might be joining them next year. So all of these concerns, I think, will continue to cap the outlook for oil. So I will certainly be looking or thinking about any oil shorts if we get to this kind of area. But anyway, guys, hope you enjoyed the video, and I will see you all in the next one.